The third one up is the corporate debt bubble, a perceived bubble, right? I mean, I imagine it. I think it's because a bubble, but we don't have to bubble until after it's been a bubble. We can't verify that it's a bubble.
I think after COVID, we can consider everything that occurred in building up debt to be a bubble.
Yeah, I mean,
And
I definitely are, but it's to say when the bubble is done growing or how big it's going to get. They're about $11.2 billion right now, which is half. That's corporate debt. U.S. corporate debt is at $1.2 trillion, which is half the size of the U.S. economy, half the size of GDP.
yeah,
That's a huge amount of debt, especially
yeah.
for companies who only pay 21% in tax. A lot. That's a lot of leverage
Oh yeah, and the
acquiring.
United States debt total is 28 trillion. So
But that's public debt, federal debt. That's not. Is that including corporate debt? No. Yeah, that's just public debt. That's the
it's just
federal
yeah.
thing. The point is, it's a lot of debt. It is a lot of debt. And last year in 2020, corporations issued about $1 trillion in new debt, which was a record 600 billion over the previous that was held. And really, what a lot of businesses use it for was cash flow, right? They sell into their revenues by debt, so then they can get cash flow to their businesses that would take that place, so they can keep themselves operational as well as they try to reorganize their balance sheets and figure things out. Some people are issuing types of debt to help them pay off other debt, right? There's a whole ways of structuring this. It's not necessarily the end of the world. The problem where this becomes dangerous is not necessarily that these have all. One thing you should note is that generally valuations will drop as companies become more levered, right? So, definitely look left. If you're investing in companies, definitely look at how much they have, what their exposure is, debt to equity and debt to cash flow ratios, debt to assets as well. But the thing is, if wind up having another downturn, right? If we do hit these things that people are talking about with hyperinflation and we get into a position where things are going down again, these companies won't be in a position to borrow more money. And these companies will be in a bad spot because they'll be constricted with revenue again, but now they'll have bloated balance sheets with lots of debt. And the Federal Reserve is not going to be able to keep easy money policies. If it pushes to hyperinflation, the Fed be screwed. So it's one of those things where, like, if in the next 2 years we see, the short term come into hyperinflation kind of shows up, these asset bubbles start popping, you see, contractions in the market, we see prices come down heavily, it could hurt companies. Valuations could come down very quickly. And I think that's should definitely be mindful of, because interest rates have been so low. You're giving away free money. And then the Federal Reserve was even buying corporate debt for a while. I don't know if they're still doing it, but they were for a while during the pandemic, buying corporate, which is just, they're just throwing money at them, which is crazy that corporations are getting debt for nothing. And my student loans are 8.5%. I mean, I pay an effective tax rate of almost 20% because I'm a contractor, and these companies pay 1%, and they make, billions of dollars of income a year. So it's definitely the tax system is not invented to be.
Well, as to one of the companies that took a huge hit was Carnival Corporation, the cruise line.
Right. Yeah.
So in November 2020, it was at $12.30. And let me tell you, at that time, it was still out of commission. Everyone was still wearing masks. Everyone was still thinking that this whole pandemic wasn't going to end anytime soon. At that time, just a little bit later, it started popping about from $12 to $19.25. And during the consecutive months afterwards, it went up. And now it's up at $28, a valuation that is very over hyperinflated.
That's because people are betting on the short-term trade. They're betting on, kind of flood to Carnival and want to go to cruises. They're going to get.
Well, they wanted to get in early. That's what they wanted. They jumped the gun. They wanted to get in early. The big guys don't want to lose money, so they're staying in the trade.
Well, yes, you generally they might want to stay in that trade. But that will Carnival cruise lines. These aren't industries that are industries. They're not like they're going to explode in value. Right, the margins aren't easily manipulated, controlled. You can't just fluctuate your spontaneously. Investments in large ships and crew cost a lot of money. Setting these things up, the logistics, same thing with the airline. They're not really meant for explosive growth. But what happens is when people expect something to go up, the market bakes these things in early, right? So you'll see news will come out about a company saying big plans, and all of a sudden the stock price goes 7%. That's 7%. Is people thinking, yes, I want to buy value, but it's also there's baking in value to what they think they should be, because they're saying based on this new information If I tweak my model, I see the revenue growth and the lost expenditures going forward actually create additional value. So the value of the price right now is considered undervalued relative to the level it should be. So buy into it, trying to push it to that level because that's the fair value, right? You kind of bake the price in. So that's what I worry
Yeah,
about, that these are hitting
I
peaks
mean,
and the prices are baked in. And then they're just
the
going
thing is that that's
to.
exactly what they do. And in on January 17th, which wasn't even its high, it was at $51. $51, and it hit a low of $8.49 within just 1 month from February to, or a couple months from February to April. It hit a low from 51 to 8. That is monumental.
Right. Then those are probably people playing these trades. Because
Yeah,
when you see a stock that hasn't had any business for like a year and took a bunch of debt to fuel itself, you see that price going up, everybody piles in. And why? Because right now we're in a year of vanity. We're in the year where everybody wants to be a millionaire. But you know why everyone can't be a millionaire in the stock market? Because investing is a zero sum game. So if everybody's fighting for the same pool of capital, but in the end, only some people can be rich. And the richer they are, the poorer or the higher the losses have to be for everybody else. But we're in a climate where everyone's just gambling. And so I imagine that any of these trades, all these comeback reopening trades, all these short trades, we're all just going to get stuck and become part of this, pump and dump. Everybody wants to rally, then sell. And the actual trades, the people that are actually trying to and figure out what the real price should be and how to fit the portfolio, I don't think you're actually able to see that information because the games are being played, right? People just want to make money on this stuff. Right? They want to
exactly.
make that easy free money. They don't care about how much
Well,
it's actually worth.
whoever held that stock back in last year, February 2020, is regretting it because they're still 50% down from that high. And
Right.
at $8, it was just like, hey, if we just held this, it's gonna go up 100%. It went down 6x. It's gonna go up over time. Yeah,
Right. Well, as long
Well,
as the industries don't stop existing, then 'cause I never doubt that the clients are gonna come back. But what I find surprising is people pricing or trying to price in the value, they're doing it so quickly. People are trying to play the markets well in advance to the companies, recovering behind them. And it's just a sign that it's not really about value anymore. And I don't even know what the true value of these things were, but you have to do all the analysis on the books. But right now, when you look at these have tons of debt and not revenue, it might be hard to predict what their next steps are going to be.
all right.
So,
Next topic. This one sounds like we're gonna keep coming back to this one, so that one's gonna be good.
corporate debt, but yeah, that's definitely something we're going to be looking
Oh
at.
yeah,
It blows up.
all
You're
day.
going to see that,
all day.
hear that all day long.